maybe it's just me, guys. Maybe it's just me, because I don't understand why you can't have a rideshare company and we all eat. Meaning the company's profitable, the drivers are fairly compensated, and I'm going to give you an idea or a business plan, if you will, on how we could possibly make this happen without as much corporate greed. But I want to tell you guys a quick story about a video I saw. It was a fleet owner. I think the video got leaked because the fleet owner had a dash cam, and this was in the early days of Uber, and it was definitely on the Uber side. I don't know when Lyft came out, but this was in the early days of Uber. And the fleet driver had a dash cam, and he picked up the actual original CEO of Uber. You guys hit me in the comments if I'm wrong with the name. I think his name's Travis Kalanick. I think that's it. I might be pronouncing the last name wrong. And he got in, and the driver, you could tell that, because this is a fleet, I'm assuming he's a fleet driver, owner, operator. And you could tell he was very frustrated. He knew exactly who he was. He knew it was the CEO. And he immediately went in. And we're talking, this is probably back in 2014. So this is back in the Uber day when it was paying better than it pays now. For context, I just want you guys to understand the context. That this is back when they're getting paid even better than we do now. And the driver was still seeing, let me get out of this direct sunlight. The driver was still seeing losses in his personal company earnings because they keep changing the business model. So because they keep changing the business model, what happens every time Uber changes the business model? What happens? Driver pay goes down, and they increase rates for the customer. So they keep changing it and changing. The guy said, you know, why do you keep changing everything? I went from like 100K a year to like 50. And of course, Travis got upset, and he was like, what are you talking about? It didn't even change for your level. Like, you're Uber Black. It changed for every tier. See, that's the thing with Uber. They make you think that when they do make these major changes, it only affects the bottom tier, UberX Share. Well, they didn't even have UberX Share back then. I guess eventually they had Uber Pool, which is the same thing. But every year when they make changes like this, these owner-operators, they know their earnings are dropping dramatically. You know, it might have didn't drop 50% back then, but I'm sure that business owner had a reason to be frustrated. His earnings dipped. And he was like, you keep changing and changing. And he had it right on the dash cam. And Travis got upset and got out of the car. You know, because he didn't want to be questioned on why you keep changing things. And I don't even think Travis knew that it affected even the fleet owners. Their changes affected the fleet owners' earnings as well. I don't even think Travis realized that when he got in that Uber, because he would never get into like a basic Uber. It always had to be the top tier Ubers, what you expect. So I wish I could find that clip again, but it was classic. If I find that clip, it will be on the channel. I'm gonna let you guys know now. Hopefully I'll find it. But it was classic. And a lot of drivers didn't even have dash cams back then. This was the early days. Again, it was like probably 2014, somewhere back then. But this had me thinking of how could you make a fair rideshare company that still produces enough profits where you could almost guarantee margin growth year after year. And this is one way you could do it. You know, this may already be a business model. This may be an idea already. I don't know about the new company's business model. I know they're working on a monthly scale, some of them. But I thought about this idea before I even heard about these new companies. And I was thinking about we should have a monthly subscription. But here's how you can make it somewhat fair and still guarantee growth for the shareholders. I would start out small, like anything, and make the monthly subscription $19.99 a month, which should probably barely cover the initial payment will probably cover the background check. If not, the second payment definitely will. But you charge something like $19.99, a month, or $19.97 because it sounds better, to the driver. So when they get on the platform, they pay their initial $19.99, and 98% of the fare is theirs. And I'm explaining why that is. So to the customer, you charge a transaction fee, a flat rate transaction fee. You never change it. This is the thing. These companies got to stop changing stuff. The only thing that's going to change is the monthly subscription. But the flat rate transaction fee of $2 stays the same. Yeah, I believe in time you can even raise that. You can make that another $1 maybe. But the transaction fee is a flat rate to the customer, $2. The minimum ride, here's the important part, because if you were going to launch this now, the minimum ride charge the customer, because you're going to get these customers with these little 5-minute rides, that's would be for them. The minimum will be $10 charged to the customer, which is not a lot. These customers are paying us for Uber now, but it's more than, the short rides are charging more than $10. Flat rate $10 because you're charging that $2 transaction fee to the customer. Now to the driver, you're also going to charge a flat rate every transaction, just $2 out of that fare. But the customer is basically paying it in, so the company's not losing it. So the customer's paying $10 for the short ride. The driver is going to get $8. That means the minimum short rides, the driver's still going to get $8. Now for the cancellation fee, it should be a flat rate $5 cancellation fee, in which $3 minimum should go to the driver, $2 can go to the company. You got to give the company something because they got to see growth. The monthly fee stays the same for the entire first year of the company. That second year, you can actually slowly increase by $10. So in your business plan, you're telling your corporation shareholders that we can guarantee growth because every year we're going to add $10 to the monthly subscription. That's the only thing that should change. But now you could tell, now the shareholders have a direct record of the company growth year after year because you're charging $10 a month per year. Now that might sound like pennies. Might sound like pennies, right? $10 more per millions of drivers. You're guaranteeing the company growth. And you're telling the drivers up front in the contract that year after year, the monthly subscription will grow by $10 into a certain level. I'm not expecting this to get to $100 because let's be real, rideshare is limited. The lifespan of this whole trend is limited because they're trying to replace real drivers. So we're just talking about maybe the next 5 years. So in 5 years from now, if you launch this, the monthly subscription will only be like $49.97, which if the driver's getting 98% of the fare, he's never going to complain. Now, are there still going to be drivers that complain about the monthly subscription going up every year? Of course. We're complainers by nature. But the company shows exact growth, and the driver guarantees what his salary is based on how he drives. Now, here's the other part of that. How do we charge for the rides? It's going to go back to the old way of doing things, per mile, per minute rates, based on what that state approves. Because every state is different with that, the per mile, per minute rate. So it's very simple. To make this legal, you go state by state, and you go back to the old way where it's per mile, per minute rate, and it can't dip below whatever that state guideline is. Simple, right? I'm thinking it is. I don't understand why corporations don't. This way they'll never get in trouble for breaking that state laws. There won't be a need for policy changes. The background check and growth of the company is funded through that monthly charge. And even on a monthly charge, you could give the driver the option to pay it up front or take it out of future earnings. You could take a certain amount out of future earnings, which I think Uber is planning to do. If not, they're rolling it out now where they're going to start charging for these background checks. And I think they cut it in half, where they charge the upfront half of it, and then they charge the other the following week. I think that's the way they were talking about they're gonna do it. So you basically could offer the driver, okay, you could pay this fee right now up front, which smart drivers would just pay it up front, get it out the way, so all the earnings that flow to them, 98% is theirs, right to their bank account. There's no need for bells or whistles or none of this. There's no discrimination because it's not driven by the way they're charging it now. I feel like they could literally charge somebody more based on where they live, which I think is going on. The algorithm knows, okay, we can charge these people more, and these people are in the ghetto, we got to charge them a little bit less. There's not going to be none of that because it's per mile, per minute based on that state. Clear, transparent receipts. You clearly know per transaction the driver's paying $2, the customer's paying $2. The driver knows once a month he's paying his monthly subscription. He could take it out of his earnings if he so chooses to. And you break that up. You take that $19.99 and say you break it up into 4 parts or 2 parts even. You know, you can pay $10 the first week and $10 the second week. This way the driver feels like he's always gonna have growth, and he always knows what his earning is because it's based on what the state guidelines are. So now you feel like it's a real transportation company. You give the driver the option to put it under his own company, LLC, corporation, or put it in his name. There should be really no reason to. You should have fleet situations, but every driver should have the option: do I want to put this in my name, or do I want to put this in my business? Which makes sense. Now with commercial insurance, I'm sure that's going to be the tricky part. You know, this is where the company up front would have to raise money just like Uber did in the beginning. It's no different. But at least you have steady growth in what the company earns every year, because you know you're going to up that monthly fee by $10. And one year like this year where the economy is bad, you might have to do something like make that transaction fee go from $2 to $3. But that's in extreme cases. You know, after the way our economy is right now, if this company was real, it would be that year where they would go from the $2 to the $3. And drivers would complain. Let's keep it real again. no matter what the company does that takes money out of your pocket, there's going to be drivers to complain. But it won't be like it is now. It won't be like it is now. The CEO would not be hated the way he is now. Things would be different. He could probably even get in a regular partner. You call them something like partners where they feel like they're part of the company. So you could call them like driver partners. This would make the drivers feel like they're really part of the company. And, you know, you do stuff like in the media, you bring on real drivers, you know, to discuss things, how the company should grow. You give the drivers opportunity to invest in the company. You know, you do things that make the drivers feel like they're part of the company's growth. This is another way that the CEO would not be hated if he did stuff like this. There's so many ways that, and this still would make billions of dollars, because that monthly subscriptions will sustain without the corporate greed. And you already got in the contract the growth. So the investors coming in, they know every year, again, okay, this year we're going up by $10. This year we're going up by another $10. Maybe we do have to add maybe $1. And some of you are going to be like, yeah, the corporate greed is going to set in regardless. And that may be true. But this business model would make drivers feel like they're part of their company, and they would not feel cheated because they're getting like 98% of the fare. And even if this only lasts for the next 5 years, this would be the way, this would be the actual Uber killer. This would be the Uber killer. If you had something like this, with a monthly subscription like this, where your shareholders know what the growth is per year, this would actually be the Uber killer. You would see Uber drivers dropping like flies. You know, Lyft would probably be the first to go, because it'll probably be back and forth between Uber and this company. Because for a while, you do want to diversify. You might even do all three. We need options. Options is healthy. Competition is healthy for business, you know? There's a reason why Burger Kings are always right down the street from McDonald's. They do that on purpose. It's usually the McDonald's is there first. Burger King is doing that. There's even like rumors that Burger King and McDonald's are owned by the same company, which I do not believe, because of that strategy. You know, everywhere I go to see a McDonald's, there's usually a Wendy's or a Burger King nearby. That's a strategy. Competition is healthy. But this corporate greed has got to stop, guys. I don't understand what is going to happen. And I know I'll be out of the game. I know I'll probably be out of the rideshare game. But I still want to see this for drivers. I want to go on YouTube and see drivers like, yeah, this new app is 3 times better. Everybody's jumping ship. This will get Uber and Lyft scared. And guess what? Driver pay will go up, because they have a competitor that's paying them better. I guarantee you, if we had a competitor paying on this type of business model, Uber and Lyft pay rate for drivers would slowly creep up. It wouldn't be 50-50. Well, it probably would be like, I believe they would probably get up to like 60-40. I don't think they'll go above that, you know, where the driver gets 60%. But I don't think they'll ever go back to like 80-20, where the driver gets 80%. It's not going to happen. It's never going to happen. And we got rideshare is limited, guys, by the amount of years. Like, I posted a video on the channel by Glendon Cameron talking about how you can't do this for the next 30 years. He's right. You can't, rideshare and food delivery, you can't see yourself doing this for the next 30 years. But on this monthly business model, you could see yourself being a fleet owner for the next 30 years. Because every year you can bring on young drivers, and they're going to be happy to drive on this type of business model. You know? And you could do something as a fleet owner, say split the earnings 50-50. You provide the vehicles, you take 50% of their earnings, you know what your company growth is every year. But in that video, that fleet owner was so mad at Travis. You know, he in the video, I gotta find that clip, guys. I'm gonna try to find it. He was really enraged because you could tell he's one of them 6-figure drivers too. He had, you know, but his anger he couldn't hold back, and he had to let Travis know, you know, why you keep changing. He kept saying that. And he had a thick accent. And he's like, you keep changing. And he was like, we didn't change it for your blood level. Yes, you did. I'm going to try to find that video for you and put it on the channel. But thanks for you guys listening to me rant. Thanks for the new support I've been getting on the Nice Guy Driver channel. If you haven't already, if you're seeing this on another channel, go to the Nice Guy Driver channel. Check that out. 3 words, Nice Guy Driver. And I really appreciate all the new support I've been getting. Please, if you haven't already, some of you are not subscribed yet. Please subscribe, like the videos, share, click the bell icon. Check those links below, and I'm going to see you guys in the next one. Thank you.